The sun had barely risen when Jake's phone buzzed with a frantic message from his sister, Emily. "I've lost everything," it read. Jake's heart sank. He knew exactly what she meant. Emily had poured her life savings into a hot stock tip that promised to make her rich overnight. Now she was broke and desperate. As Jake rushed to comfort his sister, he couldn't help but wonder, was there a better way to invest? A way that didn't involve risking everything on a gamble? Little did he know, the answer was waiting for him in an unlikely place. Later that week, while cleaning out his late grandfather's attic, Jake stumbled upon a dusty old book. A Random Walk Down Wall Street by Burton G. Malkiel, the cover read. Intrigued, Jake cracked it open and began to read. From the very first page, Jake was hooked. Malkiel's words seemed to leap off the page, challenging everything Jake thought he knew about investing. The book's central idea was both simple and revolutionary. The stock market is unpredictable, and even the experts can't consistently beat it. Jake couldn't believe what he was reading. If this was true, why did so many people, like his sister Emily, fall for get-rich-quick schemes? He dove deeper into the book, determined to understand. Malkiel introduced Jake to the concept of the random walk. It was a fancy way of saying that stock prices move unpredictably, like a drunk staggering down the street. No one can reliably predict which way they'll go next. As Jake read on, he encountered story after story of investment bubbles and crashes. The Dutch tulip mania of the 1600s, where people paid fortunes for single tulip bulbs. The South Sea bubble of the 1700s, where investors threw money at a company with no real business plan. Even the more recent dot-com bubble of the late 1990s. Each tale was a cautionary one, showing how even smart people could get caught up in investment frenzies. Jake couldn't help but see parallels to Emily's situation. She had fallen for the same old trap, just in a modern package. But Malkiel didn't just point out problems. He offered solutions. Jake learned about the efficient market hypothesis, which suggests that all known information is already reflected in stock prices. This meant that trying to outsmart the market was often a fool's errand. Instead, Malkiel advocated for a simple approach: diversify your investments and buy low-cost index funds that track the entire market. It wasn't flashy or exciting, but it had a track record of steady, reliable growth over the long term. Jake's mind was spinning. Could it really be this simple? He thought about all the times he'd heard people brag about their stock-picking prowess or their ability to time the market. According to Malkiel, it was all just noise. As he read on, Jake encountered more eye-opening concepts. The book explained how our own psychology often works against us in investing. We tend to see patterns where none exist, and we're prone to following the herd, even when it's heading off a cliff. Jake thought about Emily again. She had been so sure about her investment, convinced she had insider knowledge that would make her rich. But Malkiel's book suggested that such tips were often just mirages, leading investors astray. The more Jake read, the more he realized how much he didn't know about investing. But instead of feeling overwhelmed, he felt empowered. Malkiel's straightforward explanations made complex financial concepts accessible and actionable. One chapter that particularly struck Jake was about the castle in the air theory. It described how investors often buy stocks based on what they think other investors will pay for them in the future, rather than their intrinsic value. It was like a giant game of hot potato, with everyone trying to pass off overvalued stocks before the music stopped. Jake couldn't help but chuckle at Malkiel's colorful analogies. The author compared technical analysis trying to predict future stock prices based on past performance to reading tea leaves or astrology. It was a humorous way to drive home a serious point. These methods don't work in the long run. As he delved deeper into the book, Jake learned about the importance of asset allocation. Malkiel explained how spreading investments across different types of assets, stocks, bonds, real estate could help manage risk and improve returns over time. Jake was fascinated by the idea of creating a portfolio that matched his risk tolerance and life stage. It was a far cry from the all-or-nothing approach that had cost Emily so dearly. The book also tackled the thorny issue of active versus passive investing. Malkiel presented compelling evidence that most actively managed funds where managers try to pick winning stocks underperform simple index funds over time. It was another blow to the idea that you needed a guru to succeed in investing. As Jake neared the end of the book, he felt a mix of emotions. On one hand, he was excited about the clear, logical approach to investing that Malkiel presented. On the other, he felt a twinge of regret that he hadn't known all this sooner. Maybe he could have helped Emily avoid her costly mistake. But Jake realized that it wasn't too late. He could still use what he'd learned to help himself and others. He thought about his friends, many of whom were also struggling with financial decisions. He could share Malkiel's wisdom with them. The final chapters of the book offered practical advice on how to implement Malkiel's strategies. Jake learned about index funds, ETFs, and how to build a diversified portfolio. He was surprised at how simple it could be to start investing wisely. As he closed the book, Jake felt a sense of clarity he'd never experienced before when it came to money and investing. The path forward wasn't about finding the next hot stock or timing the market perfectly. It was about patience, discipline, and trusting in the long-term growth of the economy. Jake couldn't wait to share what he'd learned with Emily. He knew it wouldn't instantly fix her financial problems, but it could help her avoid similar mistakes in the future and start rebuilding her savings on a solid foundation. The next day, Jake met Emily for coffee. As they sat down, he pulled out A Random Walk Down Wall Street and began to explain what he'd learned. At first, Emily was skeptical. The ideas seemed too simple, too boring to be effective. But as Jake walked her through Malkiel's arguments and evidence, Emily's skepticism began to fade. She saw how her own experience fit into the patterns Malkiel described. The allure of quick riches, the overconfidence in her ability to pick winners, the painful crash when reality set in. Jake explained the concept of index investing, showing Emily how she could participate in the growth of the entire market without trying to outsmart it. He talked about the power of compound interest over time and how a slow and steady approach could lead to substantial wealth in the long run. As they talked, Jake could see a spark of hope returning to Emily's eyes. She began to ask questions, eager to learn more. Jake realized that this book hadn't just taught him about investing, it had given him a way to help his sister and potentially change the course of her financial future. Over the next few weeks, Jake and Emily dove deeper into the principles outlined in A Random Walk Down Wall Street. They set up small investment accounts and began putting money into low-cost index funds. It wasn't exciting or flashy, but it felt solid and responsible. Jake also started sharing what he'd learned with his friends and co-workers. He was surprised at how many people were hungry for this kind of straightforward, no-nonsense financial advice. He organized a book club to discuss A Random Walk Down Wall Street and other investing books. As the months passed, Jake saw small but steady growth in his investment account. More importantly, he felt a sense of peace about his financial future that he'd never experienced before. He no longer lay awake at night worrying about missing out on the next big thing or trying to predict market movements. Emily, too, was making progress. She had taken a part-time job to supplement her income and was slowly rebuilding her savings. This time, though, she was investing wisely, following the principles she'd learned from Malkiel's book. A year after finding A Random Walk Down Wall Street in his grandfather's attic, Jake received a letter. It was from a man named Tom, a friend of a friend who had attended one of Jake's book club meetings. Tom wrote to thank Jake for introducing him to Malkiel's ideas. Tom explained how he'd been on the verge of making a risky investment, much like Emily had. But after hearing Jake talk about A Random Walk Down Wall Street, he decided to take a more measured approach. Now, he was steadily building wealth and feeling confident about his financial future. Reading Tom's letter, Jake felt a warmth spread through his chest. He realized that by sharing what he'd learned, he wasn't just helping himself, he was potentially changing lives. Jake thought back to that morning a year ago when he'd received Emily's desperate message. So much had changed since then. Thanks to a dusty old book found in an attic, he and Emily had transformed their approach to money and investing. But more than that, they gained a new perspective on wealth and success. It wasn't about getting rich quick or outsmarting the market. It was about making smart, consistent choices over time. It was about understanding the power of patience and the wisdom of humility in the face of an unpredictable market. As Jake sat down to write a thank you note to Tom, he smiled to himself. He knew that his journey with A Random Walk Down Wall Street wasn't over. There was always more to learn, more people to help. But he felt equipped now, ready to face whatever financial challenges lay ahead. And it had all started with a random walk of his own, a walk up to his grandfather's attic, where an unassuming book had been waiting to change his life. Jake chuckled at the irony. Sometimes, the most valuable discoveries really do come from the most unexpected places. As he penned his note to Tom, Jake made a silent promise to himself. He would continue to spread the wisdom he'd gained, to help others avoid the pitfalls and find their own path to financial security. It might not be as exciting as chasing the next big stock tip, but Jake knew it was far more valuable. In that moment, Jake realized that true wealth wasn't just about money in the bank. It was about having the knowledge to make wise choices, the peace of mind that comes from understanding the markets, and the ability to help others along the way. And so, with a heart full of gratitude for the unexpected gift of financial wisdom, Jake continued his own random walk down the path of life, armed with the insights from a book that had changed everything. He didn't know exactly where the path would lead, but he knew he was prepared for whatever twists and turns lay ahead.